Welcome to the Trading Bell. I'm Nokip Kimboy, and today we are focusing on formerly Barclays Bank, now Absa Bank. For the last 1 year, they've been on a journey of rebranding and getting the new colors. What are the lessons from this journey and also the impact of COVID-19 on business? All this, we'll have a conversation with the Managing Director and CEO of Absa Bank, Kenya, Jeremy Awori. But we start with his profile, shall we?
Jeremy Awori is the Managing Director and Chief Executive Officer of Absa Bank Kenya PLC, part of Absa Group Limited, a position he assumed in February 2013. Prior to joining this organization, he held various positions within Standard Chartered Bank, among them CEO of Standard Chartered Tanzania from 2008 to 2012, Regional Sales and Performance Director at SCB Middle East, South Asia and Africa from 2005 to 2008, and Head of Consumer Banking in SCB UAE from 2003 to 2005. He also served in Standard Chartered as the Executive Director and Head of Consumer Banking for East Africa. In addition, Jeremy has lived and worked in the UK, North America and Asia. He completed his master's degree in business administration from McGill University, Montreal, Canada, and holds a Bachelor of Science degree in pharmacy from Manchester University in the United Kingdom.
Welcome to the Trading Bell.
Thank you very much, Noah.
Okay, so 1 year into it, what are the biggest lessons you've learned in this journey?
I think the biggest lesson that business leaders and our business has learned is just being agile, being responsive, and adapting to the situation. When we started 2020, we were working towards our brand launch in February, and then a whole series of external events started affecting what we had planned. The first, we had obviously the sad demise of the former president, and we were in a period of mourning, and we had all our plans to launch during that period. We opted to, out of respect, to shift the launch date. So you can imagine we had to move our rebranding date and all the plans that we had for that out of that period to a more appropriate period. Then we had a really successful launch, which was really exciting. A month after that, we were announcing our first COVID case. So we had a whole series of activities that were planned, which, because of things like the lockdowns and just the general medical realities of the pandemic, we couldn't do. We wanted to go all around the country, we wanted to host events, we wanted to meet customers, we wanted to meet colleagues. That was just not going to be possible. We had campaigns that we had planned. So we had to pivot quickly, you know, and just be responsive to the situation, to the mood, to the context. And that's why what we did is we focused much more on Kenyans and Kenya. What can we do? So that's why we put a lot of our time, effort and focus, number one, on protecting our colleagues, to make sure, because we are frontline workers also, banking services need to be provided throughout this, making sure colleagues were safe, the environment was safe, that the environment was safe for our customers to come in, that our banking services through our online and phone channels were working, and we were proud to have our uptime at 99.8%, almost 100%, because you don't want your channels to go down if you can't go to a branch, right? Yeah. And then we were trying to work with the government through the COVID emergency fund, where we gave 50 million, we gave masks, PPEs, you know, across into the healthcare workers and frontline workers, because we believe we have to protect them, because they protect us in a way. Yes. So we had to really pivot that way pretty fast. So a lot of the plans, best laid plans, sometimes don't come to work, but I think we did well through it. Yes. You know, and what we learned is it's important that you have to work with your customers and with your people. You know, because if you think about during COVID, you have a situation where people are losing their jobs. Businesses were not able to operate just due to the control measures that were necessary. And that's why we very quickly we were the first bank to come out with loan restructurings and moratoriums. And we restructured loans for almost 60,000 people worth 62 billion shillings. And it's just to give them a holiday, a repayment holiday, to enable them to focus on paying their salaries, keeping their businesses open. Because if they don't do that, who's going to be able to pay a loan? Yeah, do you know what I mean? So for us, I think we pivoted. We had to accelerate our digital agenda, which I think was good in a way.
Yes.
And we had to adapt to new ways of working remotely. I mean, now we had 55% of our head office and support functions working remotely.
And, you know, people might argue it was almost prophetic for Absa. Before you guys started closing down some of the branches, physical branches, and you're foreseeing this future, relatively present and future of digital banking, people banking on their phones and remotely.
Yeah.
So far, how is that holding on? Is it a trend that's going to continue moving forward?
Absolutely. I mean, at the end of the day, what do customers want? They want convenience. They want products and services that meet their needs wherever they are. You know, so I think there were a number of people who hadn't made that transition and suddenly were forced to make that transition. Suddenly you realize, I don't remember my PIN for my internet banking, right? And then you have to make a transfer, or you want to make a transfer to your mobile wallet to make payments, or you've forgotten your PIN to your credit card or your debit card, and you don't want to handle cash. So what we did is we tried to provide a lot of support on that front to just help people transition. And now many people are like, I wish I'd done this sooner. So that's why I think that transition was going to happen anyway. I think COVID has just accelerated it for various hygiene reasons, and that's why we were investing so much in our systems, and we'll continue to invest in our systems.
Definitely. And recently you put quite a figure into the technology agenda, saying that you're going to do almost 60 products that are geared and are driven by technology in the banking sector. How is this possible and achievable?
Yeah, I mean, to be honest, it's a continuation of what we've done over the last, the last 3 years. If we think about the last 2 years in particular, we probably did 150 projects in that 2 years. What a lot of people don't realize through the rebranding, we also replaced and upgraded a lot of our system architecture. So every weekend, literally for 2 years, we were doing a system upgrade, and that money is even more than the 1.6 billion that we're talking about. And it just shows our commitment to invest for customers, to invest for a platform that's stable, that will deliver you a consistent customer service, that you can rely on. Because when you're doing transactions, you want to make sure that they work exactly the way you want them to. These new 60 projects are a number of things. They are projects to improve the customer experience and just the usability of platforms. We will add functions to the existing platforms. And then we have some very new and exciting products that are not in place right now that we want to launch that use either mobile or online banking platforms.
Definitely. Now, going into the money aspect of it, we understand the issue of unregulated lending in the country, and you are in this space and you're innovating further. What is in the pipeline for this sector? Because majority of our population actually, they can't collateralize the credit they get from lending institutions. So what are you doing to help propagate healthy but also sort of unregulated lending?
Yeah, I mean, the first thing that Absa does is it wants to make sure it treats its customers fairly and correctly and ethically. So, with our products and services, we want to make sure customers understand what they're buying. They understand the terms and conditions of the product, before they buy and when they're using it. So that's very important. And you touch on unregulated lending. Sometimes what happens with some players is that they're not fully transparent. And I think that's what the central bank quite rightly wants to regulate, because they need to protect customers from being from some of those players if they're taking advantage. And there's things like, for example, data security, confidentiality. What are the systems doing with the data that they're gathering on your phones, for example? So for us as Absa, what we're doing is we launched our Timiza platform, which is it's essentially it's like an online banking platform. You can open an account within a minute on your phone just using your ID. We then can do a credit score review and tell you how much you can borrow on your phone. We then give, if you decide to accept that loan, it goes onto a wallet, and there you go. You're able now to to continue. But I think going forward, yes, there needs to be the right regulation to protect customers. I think the banking sector is responding very well with the banking code to make sure that these things are attended to. And we look forward to this because you're right, at the end of the day, the majority of Kenyans don't have collateral. And banks are responding using analytics, using connected systems to make credit decisions that don't require collateral. And that's going to be the artificial intelligence, deep learning, big data. Those are big words that people use, but those are things that are reality as we start thinking about how do we provide credit into the economy, how do we provide credit to Kenyans who don't have security, and that's a place Absa is going to be spending quite a bit of time on.